Hey everyone, after a tremendous 4 years in the slump, our REITs finally poised for a rise. A rise for what we call game on. Yes, in this video, ladies and gentlemen, I'm going to go back to see whether real estate investment trusts will actually rise finally based on a couple of grounds, which I think investors like you should want to pay great attention to. But first and foremost, let's look further. Let's look at basically how have REITs performed. Now, in fact, in the last 4 years, the likes of the better REITs, for example, like Capital Land, Ascendus REIT, you can see from the chart, well, it's just one way down. In the last 1 year alone, you can see that Capital and Ascendus, has fallen like 6%. But in the realm of things, you can see that in the last 9 months alone, from October, as you can see from the red rectangle formation, it's been doing between 250 to 60 against the base formation. Now, just this week, ladies and gentlemen, you can see that they have broken out of that downward trend, as you can see from the purple light, and actually closed at 269 just last week. Is it, and to what extent is the volume confirmative of a recovery? Well, look further on this video so that we'll take you through. But before that, take a step back and see what has been happening into the real estate investment trust market. 4 years ago, ladies and gentlemen, we told GCP Global investors in our quarterly investment classes that real estate investment trusts are non-investable, simply because interest rates were going up. Real estate investment trust, in our analysis, has always been about interest rates. If interest rates go up, REITs price suffer. If interest rates go down, and the possibility of this actually happening now is rather strong, then you actually have a good case for REITs. So after 4 years, do we actually reach this opportune time where you think things may have changed? Well, take a look at essentially this 10-year bond yield. You can see that essentially they went up like 60 basis points, 70 basis points, from 3.9% to 4.6%, when the tariffs were actually announced and caused a fiasco in the market. For those who are attending our classes, we told you this was the perfect opportunity to buy. And of course, if you have listened, you would have made a lot of money in just the last 1.5 months. Well, since then, after hitting 4.6%, you can see the 10-year bond yield now it's on the decline. Despite the war, despite the Israel-Iraq bombing, Iran bombing, and you can see that essentially rates have suddenly fallen, and now thankfully we have a good ceasefire. You can see that rates are now falling and have fallen below 4.3% for the first time since the fiasco started. Now, will they continue? Will they actually go down to below 4%? This will trace a very interesting path for real estate investment trusts. Now, the second thing to look for is the Singapore 10-year bond yield. You can see, ladies and gentlemen, all the way down. It's from like 3.4% down to 2.02%. Now, as you know, ladies and gentlemen, there's such thing called a yield premium. So if the 10-year bond yield in Singapore is roughly 2%, and REITs actually sell at dividend yield of 6.2% average, the difference, 6.2 minus 2%, is your yield differential. Now, at 400 basis points in history of the 21-year history of Singapore REIT market, it's actually the highest, one of the highest. And these are actually times that were rich during crisis periods that we saw previously prior to the lows of real estate investment trusts. And this is something we are seeing again. So if anything, it is actually looking very attractive for real estate investment trusts. Well, there's another thing that's very interesting this week, and that is actually, if you look again, that another REIT that is probably climbing out of its multi-year lows. In this case, it's Maple 3 Industrial Trust. You can see, look at the chart here. In the last 1 year, in fact, the last 5 years, it's just been straight down. But right now, you can see that within this week, they challenged and superseded the downward trend. So, like Capital Land Sandist, which we rate as one of the better well-run REITs, these are the ones that are actually showing already signs of eclipsing its downward trend. But of course, in our classes, we have told our investors that essentially, you know, REITs basically the two kinds, the so-called the don't waste your time REITs as well as the grade A REITs. So a very good example of the don't waste your time REITs, for example, would be like Elite UK REIT. You can see, ladies and gentlemen, that despite a huge fall, that is, you can see it's down 52% in the last 5 years. It has traced a long, long bottom, but it has yet to break out. But even if real estate investment trust right, you can see that Elite's probably one of the REITs that will lag behind because at the end of the day, what even they change the name, they are still going to buy properties from their sponsor in the UK, and essentially those are already predetermined properties, and that essentially is not going to waste help you booster the eDPU. So if anything, you ask yourself, does this REIT exist to just buy assets from sponsor or other things else? You decide. So like I say, in our classes, we tell you don't waste time or don't waste your money on REITs like this. Now, the second one is actually the second class REITs are basically your capital US Oak REIT, your Manulife REIT, the office property. This is what we call the goners. These are the ones that opposite of game on, it's game off, right? They may recover because real estate investment trusts will recover if interest rates continue to fall, but they will lag behind the first grade ones. And of course, ladies and gentlemen, you're looking for the first grade REITs, which are the better ones to position. If you reckon and think that interest rates will continue to fall, do join us for our class on 30th of August. You can sign up over here at our website. Do sign up quick because we are still offering the early bird special price. Now, moving on, ladies and gentlemen, as you can see, the opportunity cost of not picking the right asset class or investing in real estate investment trust over the last 4 years is very high. Now, this is a chart, ladies and gentlemen, that on my holdings in Alphabet A. This is actually from my UBS private banking account. You can see that in the last 4 years. Now, while we told investors do not invest in REITs as an asset class, but we tell you to go into the Magnificent Seven minus Tesla. So, for example, my stake and my value in Google, or Alphabet A, where my cost price is 115.75, my gain as of last Friday is actually up 54% overall, a total market gain of almost $1 million. And you can see, ladies and gentlemen, this is based on market price as of Friday at 178.53, meaning that my total market value of my holdings in Google A is 2.8 million as of Friday. So you can see, ladies and gentlemen, in our classes, we put and we don't waste our saliva. We put our money where we tell our investors you to actually go in. So in this regard, you can see that it's the kind of fine tuning that we look at, for real estate investment trusts that is actually doing very well, And then last but not least, so while we actually becoming more positive on REITs, for example, when I sold off my Fraser Centerpoint Trust, and so I'm buying back at 2.14 and 2.16. In fact, because I take the view that real estate investment are the hoops of the turnaround, and that's where you should be positioning into. So remember, ladies and gentlemen, as I said in my last video, yes, I know my last video was done almost 1.5 months ago. That's because if you attended our classes, the winning trades that we highlighted had allowed me and my family to be traveling for the last 1.5 months, which is what we did. We have been traveling and almost for 2 months, and now we're back. So remember, in picking good stocks that will multiply your wealth, look for and which are the ones that help you to land the sucker punch. So for more of these stocks that will help you to land the sucker punch that will multiply your wealth, do join us for our class on 30th of August. Once again.